How's it going, everyone? It's Sam. We just got news that a new multi-trillion-dollar company is going to be buying Bitcoin with their ETFs, and possibly a huge amount, 15%. This is just the beginning. A lot of people don't understand how the math works and why it's so attractive for some of these ETF companies to include Bitcoin in their ETFs. And we heard about it last week from BlackRock with a couple of their tens of billion-dollar funds. I want to break down the math and show you why this is just the beginning and why you haven't seen anything yet in terms of inflows. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this as soon as I make them. There's also a link to Margex underneath the video in case you get bullish from what I'm about to say. You can try out Margex, you can long and short crypto. You can see we also had a massive pump. We actually hit new all-time highs today, up to 73K, and then went back down. Part of it, I think, is whenever we see an all-time high like this, we see a pullback typically, and then we continue trending sideways, and then we move back up or continue to consolidate. So it's normal to see these kinds of big moves. Be ready because there's just a lot of money flowing too. There's a lot of volume. So get ready for some volatility, and if you want, you can sign up with a leverage exchange like this, go lower leverage, and you can make a lot of money as long as you're not too greedy and you know what you're doing. I do also have a video on how to leverage trade on Margex. I'll put that on the end screen. But as I said, there's a massive company, $1.7 trillion patent capital management, that filed with the SEC to buy Bitcoin ETFs with up to 15% of their trusts. And after seeing this, I think it's really important to understand why they're doing this. They're doing it because they're going to make a metric boatload of money. A lot of people don't understand how the math works, but I thought I'd break it down, especially because this is a smaller trust, to be clear. The patent capital management trust that they were talking about, it's just like $1 billion in AUM. It's not that big, 1.38 billion. It's much smaller than some of these other funds that we were talking about last week, like Global Allocation Fund. This, I believe, is like 10 or something, $17 billion. But there's another BlackRock ETF that BlackRock said that they were going to possibly start allocating to Bitcoin in. So we're seeing multiple ETFs start to allocate towards Bitcoin, and I think it makes a lot of sense. Let me explain what this is, or why this is. And we do have one other piece of news too that I want to hit on, coming from Michael Saylor. But let's take a look at a fund without Bitcoin to start. So let's say you have an AUM of $1 billion, right? $1 billion. And let's say you buy bonds, treasuries, etc. Like the Strategic Income Opportunities Fund. That's the name of the one that BlackRock said that they were going to include Bitcoin in. So they invest in things like bonds, treasuries, etc. They have fees. Let's say they're 0.8%. I don't know what the Strategic Income Opportunity is, but the Global Allocation Fund has fees right around 0.8 or 0.9%. So your fees on that as a company are about $8 million a year. Okay, $8 million, nothing to scoff at. But that's as far as it goes, right? You're buying bonds and treasuries that don't really do anything for you in the sense that after you invest in them, there's no like second level of making money. They go up slowly, right? They have 4 or 5% returns, maybe slightly higher or lower depending on the market situation. But then let's take a look at the scenario with Bitcoin and why it is so attractive to so many people, to so many investors. Okay, so you have this fund, whatever fund it is, with $1 billion of assets, right? Same thing, $1 billion of assets, and they're buying Bitcoin, but then also bonds and treasuries, etc. So it's the same thing, just they're also buying Bitcoin. They have the same fee, that 0.8% fee, but this is where it ends pretty much. So this is where the similarities end. You have that $8 million in fees, but let's say this fund was 10% Bitcoin, just 10%. This would be $100 million worth of Bitcoin. Let's say it's BlackRock too, so they're buying their own ETF underneath. Well, they get a 0.2% fee for the AUM in that Bitcoin ETF. So they make the front end on that Global Allocation Fund or Strategic Opportunities Fund, that 0.8%. But then because they're investing in their own asset too, they get another 0.2% on this 100 million. And that's great. That sounds like that's where it ends. That's where all the benefits end. But no, that's not where it ends. This is about an extra, well, in this case, it would be about $200,000. So not a huge amount of extra fees from that 0.2% because we're taking 0.2% of the 100 million. So yeah, that's a little bit of an increase, right, in fees overall, which is great, but not huge. But there's several other things that really benefit them. It pushes their AUM on Bitcoin higher. So just in their Bitcoin fund, they have another $100 million worth of Bitcoin, which pushes them bigger than a lot of the other ETFs, right? It continues to balloon their AUM to make them look like the de facto leader. It also gives higher returns in the fund, this fund that has $1 trillion in it. That's where it gets really crazy. And you get higher fees from that higher AUM. So let's say Bitcoin 3x's, right? Bitcoin goes up to 210,000. The rest of the fund, let's say, just does a 1x. It doesn't give any returns. Well, the fund AUM would now be 1.2 trillion because again, you have 100,000 or 100 million of that 1 trillion, and at 3x's, then you have an extra 200 million. So you have that 1.2 trillion. And remember, you get to charge that higher fee on this 0.2%, but more importantly, on the 0.8%. So you can charge a much higher fee, and then you get extra benefit if the Bitcoin ETF goes up because you have higher AUM overall. So now in this fund, you can charge 0.8% at that higher 1.2 billion dollar fund level. So now the fees are much higher. Now you have fees over $10 million compared to $8 million because you outperformed significantly. So it also attracts more capital. I didn't even write that in there, but if you have an ETF that's mostly bonds and treasuries, people think that's pretty risk off, but then, it's got a 10% allocation to Bitcoin, and then it returns 10% or more, right? This would be a 20% return with what people generally consider is low risk bond and treasuries. This would outperform the S&P 500 most years. So this is kind of crazy. It would outperform, which probably brings in more AUM. It also would just balloon in AUM because of the increased price action of Bitcoin. Now, of course, this is with a 10% portfolio allocation. I don't think we'll start there, but you can see why that would be really attractive to a lot of ETFs, especially ones that have their own Bitcoin ETFs like BlackRock, Fidelity, but even people like this or funds like this, the Patent Capital Management. Like if you can get that high return on Bitcoin and balloon your AUM and do it in a way that a lot of people don't really care about, like putting a couple percent, maybe 10% of a fund in this asset, and you can sell it. It's really easy to sell. It's the best performing asset of all time. And now a lot of the big ETFs are buying it. Well, you can balloon your AUM, and it's got to start somewhere. So yeah, this is only a $1 billion fund. This is like 1/2000th of their total AUM, but it's going to be in more funds, and it's going to be in retirement funds one day, and it's going to juice up returns for a lot of people to get higher and higher fees. Like that is one of the reasons why all these institutions want Bitcoin. One, they can charge like double the fees because they can charge fees within their other ETFs. But then two, they can also just balloon their AUM, which makes everyone happy. They're all trying to fight versus each other to get the highest returns. And obviously Bitcoin gives great returns. So this is just a way that I think a lot of people haven't thought about that helps balloon Bitcoin AUMs. And obviously, like if they're buying ETFs, I should have said this at the beginning for anyone that's new to the space, but if these big institutions are buying ETFs, that means the price of Bitcoin most likely is going to go up because they're just buying these ETFs that then go and buy Bitcoin. So this is super bullish. Now we're going to see volatility, right? We're not going to be up only. As you can see, now we're below 72K. Some people might be like, oh, what's happening? Remember, we were here literally up until yesterday. Like we're going to see some big fluctuations in price because we've made massive moves and we haven't seen a ton of pullback. So be ready for some liquidations both ways. Get ready for some volatility. Now let me play this. This is from CNBC, as of today. I actually haven't watched the full thing, but let's just play it here because Michael Saylor was on live TV, and yeah, whenever we can get Michael Saylor on, I think it's important to watch. Let me play this a little bit louder for you, and I think this answers some of the questions that normal people have when looking at Bitcoin, like how am I supposed to use it if I can't go buy coffee with it, or why would I even want it? So let's play this. I don't know how long it is, if we should play the whole thing, but you know, we'll see how it goes.
Welcome back to Squawk Box this morning. Bitcoin crossing the $70,000 mark for the first time on Friday. This morning, it's now above $72,000. Join us right now to talk Bitcoin is Michael Saylor, strategy executive chairman, and 8K out from the company this morning, revealing it just bought more than $800 million in Bitcoin. As of the end of last month, his company held about 200,000 Bitcoins. And Michael, I want to thank you for joining us. You have been early and courageous, and you continue to double down. I want to talk about where you think Bitcoin is, but also want to talk about how you think about MicroStrategy and your company as a proxy for Bitcoin now that ETF.
Okay, so I need to stop this for a second. Look how happy Michael is. Like, he is just pumped up about how this market's been going. And this CNBC host, I'll be honest, I'm terrible with names. I don't remember his name, but he is very openly bearish towards Bitcoin. So I think Michael's like, okay, this guy has to ask me about Bitcoin. This is great.
ETFs are available to the public.
Sure. Well, I think I'd start just with Bitcoin. Bitcoin is certainly at least digital gold. It's going to eat gold. It's got all of the great attributes of gold, and it's got none of the defects of gold. If you could teleport gold from New York to Tokyo in a few minutes, people would like it. It's going to divert capital from risk assets and risk ETFs like SPY, and you can see that these ETFs are doing that. It's going to be incorporated into a lot of funds like the BlackRock Global Opportunities Fund or the Strategic Income Opportunities Fund. And so it's an asset class. As it goes into other funds, it's going to become structural. The halving is going to cut the organic supply of natural sellers in half around April 20th. That means there's only about $32 million a day of natural sellers. And the price of Bitcoin is going to have to adjust up in order to meet that investor demand. So I think that's what's going to happen next to the asset class.
In terms, though, of how investors should think about your company, and right now I think they think of your company as a proxy for Bitcoin. It was a way for investors, frankly, who didn't want to buy the underlying coins to get access to Bitcoin and exposure to Bitcoin. The question now, though, that these ETFs have been approved and folks are funneling money towards BlackRock and so many others, how should they think about your company versus doing that?
Yeah, so BlackRock is like the container ship or the super tanker of Bitcoin. They can take $1 billion a day into their capital structure, and they can hold that very efficiently, 25 basis points. MicroStrategy is like air freight. We got higher performance. So what's going on here? MicroStrategy's got leverage. If we borrowed $800 million at 62 basis points, is there any company in the world that you wouldn't like to invest in that could borrow $1 billion at less than 1% interest to invest in your best idea? So we get that very intelligent leverage. It's non-recourse, it's unsecured, and then we buy Bitcoin with it. That leverage gives us volatility. It gives us performance. The performance gives us volatility. The volatility attracts capital, and we can then leverage more. It's kind of intelligent because it's convertible debt. It's given our shareholders more Bitcoin per share this week than they had a few weeks ago. So it's very accretive for them. And it's pretty compelling for every investor. If you're Bitcoin curious right now and you want to buy Bitcoin at the all-time high, how do you get the upside in Bitcoin with downside protection? MicroStrategy sold $800 million in debt, and we have $13 billion of Bitcoin on the balance sheet. So we're giving you an over-collateralized loan and the upside. But if you're a Bitcoin maximalist and you love Bitcoin and you want to hold it forever, the ETFs charge you 25 basis points. MicroStrategy is accreting. We're giving you a yield against your shares in a tax-efficient fashion. So the maximalists like the equity. The hedgers, they kind of like the upside with downside protection. The traders love the vol. You know, we've got 100 vol asset here, and they just like the vol. So we're unique because you can't really trade options on the ETFs. And an ETF isn't going to issue a convertible bond with upside to Bitcoin, but downside protection.
So Michael, I try to understand the mathematics, and I know people like you went to MIT, and it just seems maybe it's more understandable for you or Andreessen or Peter Thiel or whatever. At 17, down from 68, and you know your leverage and everything else. Did you ever wake up in the middle of the night and have any doubt whatsoever? That's my one question, because I was thinking about you at 17,000, and now I look at it now, and I just can't believe what the market cap of your company is based on it now. I guess, and the other thing is, when it halves, should we, if we look at it on stock to flow, do we have to just double what the potential price is based on, if you use that metric? Is that a valid metric to use? And after the halving, shouldn't it be 140,000 immediately if it's worth 72 now?
Two good questions, and thanks for asking me. First, with regard to Bitcoin, no, there's no doubt in my mind Bitcoin was a better investment at 17,000 than it was at 65,000. I take the Warren Buffett view on this. Bitcoin's a superior investment to gold, equity, bonds, and real estate because it's digital. You can trade it 1 million times faster than conventional assets using a computer. It's available. Most other assets only trade less than 20% of the time. Bitcoin's trading 168 hours a week. We bought $800 million of Bitcoin, and a lot of it we bought over the weekend when all the conventional markets are closed. It's global. It's the most widely recognized and trusted investment asset in the world right now. It's ethical because it's the king of all commodities. There's no issuer. There's no company. There's no country controlling it. And fundamentally, it's useful. Thousands of market makers can trade it all the time. Millions of companies can trade it. Billions of people. If you want to buy a house on Saturday in Africa, this is the way to do it. If you want to buy a car on Sunday morning, this is the way to do it. So it's a pretty great asset. It's the greatest of the assets, in my opinion. There's no second best asset. So I didn't have any question about it. We're just waiting for the rest of the world to realize how good it is. As for your second question, the halving, look, the selling in the market for the past month has been primarily bankruptcy estates that are liquidating GBTC at FTX or Genesis or the like. Once they got done rebalancing, the natural sellers are the miners. The miners can only sell 900 Bitcoin a day right now. They're only going to be able to sell 450 Bitcoin a day coming the end of April. As long as there's more demand in the market than the 450 Bitcoin a day, there isn't any catalyst to drive this asset down. It has no cash flows. The critics think that's a defect. It's a feature. With no cash flows, no quarterly results, no product cycles, this is the longest lived asset in the financial ecosystem with the least uncertainty. We're buying it to hold it 100 years. So that being the case, that $66,000 to $16,000 crash, that shook out the tourists, that shook out the non-believers. When it was 16,000, we were all ready to write it to zero. And that's what you'll find with the Bitcoin maximalists. So now we're riding it the other direction, and the protocol's working to everybody's benefit. There's just no reason why it shouldn't just keep adjusting up to find the marginal supply as the demand builds.
Your market cap, Michael, is about $24 billion. You mentioned you got about $15 billion in Bitcoin on the balance sheet. So the substantial part of your market cap is now Bitcoin as opposed to your core software business. Does a software business exist solely so you can borrow off of that in order to buy Bitcoin? And how can we understand right now the health of your business as you undergo a transition of customers to cloud-based software?
We have now rebranded ourselves as a Bitcoin development company, think like a real estate development company. And certainly the substantial amount of our enterprise value is based on our unique ability to issue securities and to purchase Bitcoin with convertible debt, with equity and the like. And so we understand that. But the only reason we could make this transition is because the software business was healthy. It does generate steady cash flow. It does allow us to issue debt, to issue equity. It does make us unique because we're able to, we've got a very functional options market. We've got a very functional debt market. And we've got a very stable operating business that we can use. If you look at our last result, we actually bought a lot of Bitcoin with operating cash or cash out of the operating business, and that is purely accretive to our shareholders. So we think we're unique, and that's working very, very well right now.
Hey, Michael, do you think long-term that there's any risk at this point? Has Bitcoin reached such escape velocity that there's any risk that governments, the U.S. government, Chinese government, other governments, somehow do something to Bitcoin that puts its growth in jeopardy?
You know, it's another great question, Andrew. A lot of times the skeptics, they say Bitcoin looks too good to be true. It's so good to be true, someone's going to take it away from you. And that's based on a fundamental misunderstanding about Bitcoin. People refer to it as currency or digital currency, and that's unfortunate historical artifact. It's not digital currency. It's digital property. And once you make that big leap and understand it's property, you see the compelling use case is capital preservation for everyone in the world. There's no anathema associated with owning property. You can own $1 billion building in New York City. You can own every place in the world where they allow you to own property, which means China, Europe, the US, they're going to embrace Bitcoin as digital property. All the controversial issues around cryptos have to do with their use as a medium of exchange. But what I'm here to say really is medium of exchange is only worth $1 trillion. Store of value is worth $100 trillion. So I give your company, I give your family, I give your institution $1 billion. I drop you in Africa and I say, you got to save the capital for 100 years. What are you going to buy? And the answer is nothing. There is nothing on the entire continent you can buy that's better than Bitcoin. So Bitcoin's going to be embraced as property. It's going to be controversial if people think of it as a currency. So I would encourage people to think of it as digital property, $1 billion building in cyberspace. And hold it for 100 years.
Does it ever have to be a currency? Or do you think it ever becomes a quote unquote currency?
It doesn't have to be a currency. Nobody's trying to buy a cup of coffee with a fraction of their building on Fifth Avenue, right? But every rich person I know owns property in London or New York City or somewhere, and none of them complain about not being able to spend their building to as a medium of exchange. So the killer application is capital preservation for everybody. The store of value is the killer use case. Medium of exchange is a distraction. Governments are always going to issue currency. They're always going to make it legal tender, and that's just fine. Bitcoin's competing with gold. It's going to eat it, and then it's competing with risk assets as a long-term hold, and it's competing with you buying an Airbnb as a retirement income source if you're a middle-class person.
Michael, I want to thank you for joining us this morning.
All right. I think that was really good. Obviously, a lot of people, even my wife just a couple days ago asked me, like, can you use crypto, like Bitcoin? And I said, yeah, I mean, you can send it, but not too many people want to do that. And she said, well, what's the point of it? If I can't buy something with it, why would I want to hold on to it? And yeah, that answers that question. And as you can see, we're still going to see pullbacks. Like I said, there's going to be volatility. We're coming down a little bit, but as long as we consolidate and then move back up, it's bullish short term, or price action in the short term doesn't really matter for the long term either. Like if we see a 20, 30, 40% pullback, we're still fine. We're still fine long term because there are going to be so many institutions that put money into Bitcoin. And while they're announcing to the SEC right now that they're going to do so, I don't think any of them have actually done it yet. Maybe they're doing it behind the scenes, but we have not seen any information that the Global Allocation Fund has actually done that, or the Strategic Income Opportunities Fund has started to do that. But keep in mind, just these two funds, the Global Allocation and the Strategic Income Opportunities, is $50 billion in AUM. And when you start thinking about that, okay, 1% is 500 million, 5%, $2.5 billion worth of buying. And this is just a small percentage of what they have in AUM. This is just these two funds are about 0.5% of what BlackRock has in AUM. So 0.5%, and they're talking about buying maybe 1% or 5% or something into Bitcoin. Like, this is just starting. So keep that in mind. Keep thinking long term. And sorry, I did take the movie away. My computer uploads so slowly here where we're at. So we will get back to it with videos here very soon. Be on the lookout for more. I appreciate it. Let me know your thoughts on all this underneath the video. Again, you can check out Margex underneath the video in case you want to trade on leverage and you want to trade some of these vicious swings, some of these volatile swings. Thank you so much. I appreciate it. I will see you in the next video. Bye.